You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to watching the Financial Survival Network. Well, the person you're about to hear from when we last spoke was sounding the clarion call for higher record precious metals prices. Well, we haven't had it in silver yet, but we're certainly approaching it now in gold. Just a couple of days ago, depending on what chart you look at, gold was almost at the point of hitting all-time highs. But it doesn't really matter if it does it now or in several months. I'm talking about Chris Vermeulen, and the site is thetechnicaltraders.com. Chris, well, hey, this is my hat's off to you. You pretty much nailed this thing.
Thanks. Yeah, well, I mean, it's partially luck, but the charts were pointing to this unfolding and pretty much right on time. I actually did a talk about a year and a half ago saying that February, March, sometime 2022 was supposed to be the year where all the cycles bottom for the precious metals cycle. So it's pretty interesting that everything's taken this long. It's unfolded, and now we're really starting to rocket higher, and all the signs are there. I think are around the world and within all different aspects of the financial markets that this is the time for metals to finally shine. And we've been waiting a long time. I mean, 2019 was the breakout for gold, but now we're about to break to new highs and actually start a new leg to all-time highs, going higher. And this is where a lot of money can be made if we do see these upside targets for gold being reached in the next 6, 9, 12 months.
Hey, you don't have to be so modest. You called it, and you're right. I guess the final red flag, if you will, the final technical indicator to me was last month in February. Gold closed just over $1,900 an ounce, and wasn't resounding, but past that resistance. And then in March, pretty much all hell broke loose.
Yeah. Well, I could show you the chart of gold, and people can get a visual of kind of what it looks like. If we take a look at the quarterly chart, this goes back to the 70s, but you can see when there's a bull market in gold and when it's completely out of favor. Then we had this big bull market from 2000, 2011. And then it's been out of favor. 2019, it broke out of this base, had a huge run up, and we've been consolidating, pulling back. And now we're on a quarterly chart. We're pretty much set to close at all-time highs on the quarterly chart. And this chart here is pointing to $2,600, $2,700 for gold. And I think that could take 2, 3, 4 bars. And just keep in mind, each bar here, this is a quarterly chart, is 3 months. So, over the next year, we could see gold, start really taking off to the upside. So this is pretty exciting that we're up there testing and threatening to break these new highs. And you definitely have a little bit of volatility recently. If we look at the daily chart, you can get a real visual of how we've seen gold run up with fear, and then the war hit and we had a huge intraday spike. And then, of course, we've got the war premium now added in. This upper blue line is kind of all-time highs for the gold futures contract, the continuous contract. And now we've hit that threshold where this became mainstream media. Everyone I know was talking about gold. It's in the news. And of course, everybody drives it up. And usually that's the sign you're going to have some type of pause or pullback. That's what we're seeing right now. And so I think we're going to see gold and commodities across the board probably take a bit of a breather. They've had huge moves. They're a crowded trade now. Everybody's doing it. And that means the move is over temporarily. And this could take a couple of weeks. This could take a couple of months. But overall, going sideways at this point is a very, very bullish sign for commodities. We don't really want things to keep going parabolic straight up, because that means they're going to come probably straight back down. So a pause here makes a bull flag or a pennant formation, which would point to a halfway point or the next leg up. So there's a lot of upside potential here if we see the market hold up and trade sideways for a couple of weeks or months.
All right. Could you just go back to the prior chart? I want to point something out.
Sure.
Okay. Now, if I'm not mistaken, that is a huge cup with a handle, right?
Yeah. That is a very bullish sign. Comes down, rounds up, and then you've got this handle, and cup and handle patterns are extremely powerful. The way a lot of people will gauge them is kind of through, the high and through the handle. Whatever this distance is, you can typically times that by 1, 2, 3, or 4 times to the upside. They carry a lot of power to them. So if you were to take that extreme measurement, we're talking high $3,000s, $5,000 gold, but that's an extreme pattern. But we do have the perfect storm. We are in kind of like a reset, like in 2000, where everyone wanted stocks, everyone wanted real estate. Commodities were the most undervalued asset. Well, we saw that over the last year and a half. Commodities were the most undervalued asset. Everyone was into everything else but commodities. Other than oil was bucking the trend, but that's the one-off. And now we're at this perfect phase here where we're coming into a super cycle for commodities. And we've got the COVID kind of supply chain issue where we just can't seem to catch up with normal demand. And then we throw the war into it, which adds even more premiums onto commodities just because it's we're in war. But now we've got Ukraine, which is a huge resource country, 4th largest. They're coming to a grinding halt with what they can produce. Now all of Russia's stuff is being boycotted. So now we're lacking that. So, not only are we in this perfect storm for a major super cycle up in commodities, but we got all these other things that are just going to feed, to the fire that we could see, prices we just wish we never saw. And we hope we don't get there. But there's a perfect storm here for some ridiculous commodity prices, inflation to get back up to levels I think a lot of people don't even want to think about. It's going to create a recession. I'm not trying to be a doomsdayer, but to me, these are all very valid. These are very logical things that could happen based on what's unfolding. And that's my whole point of, you and I talking, is to kind of share my thoughts and my concerns, because these are real concerns. This stuff can really happen. It's going to impact all of us, and cost of living could continue to skyrocket.
Oh, that's baked in the cake. The recession's baked in the cake based on the price of energy, oil being over $100, guaranteed recession there. One thing I'd like to point out also is that we've got the West discouraging energy production, whether it's hydrocarbons or it's the green economy. That's all they care about. So at the very same time where the supplies are getting choked, we have governments actively discouraging new supplies of oil and hydrocarbon-based energy. And they're not making it any easier to mine the copper. We talked about that last time. And the other minerals. You saw what happened with nickel. That is a major battery metal that has gone absolutely parabolic. Did you ever see a chart like that before, Chris?
No, I wasn't around for the tulip bubble.
Yeah. Well, Bitcoin kind of looks like Bitcoin, but it will come crashing down. You got to understand, barring a protracted war or whatever, that price is not sustainable. You see a gap there. It's going to fill the gap, right?
Yeah, I think so.
Yeah. We don't know when. And, at some point, wars end not because necessarily there's a victor or because there's a loser. They end because both parties are the losers, or the multiple parties involved, and they know that it's not sustainable and it has to end. So normalcy can return. So what other commodities are we looking at here in the super cycle?
Don't just survive, thrive. The Financial Survival Network.
Goldterra Resource Corp is a gold exploration company that has assembled a highly prospective district-scale land position on the doorstep of the city of Yellowknife in Canada's Northwest Territories. Goldterra is currently focused on expanding and delineating gold resources at the company's Yellowknife City Gold Project, with a goal of discovering over 5 million ounces. With ready access to infrastructure and multiple high-grade gold discoveries, Goldterra is on track to re-establishing Yellowknife as one of the premier gold mining districts in Canada. Goldterra trades as YGT in Toronto and YGTFF on the OTC. For more information, go to goldterracorp.com. That's goldterracorp.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Well, let's just take a look at, so typically within the stock market cycle, when a bull market in equities is coming to an end, we tend to see commodities do very well. Typically energies, precious metals, and that's what we've been seeing recently. And I like to follow the miners of what the miners are doing, because they're usually moving first or following up. And if we take a look at the base metal miners here, I'm just going to zoom out a little bit here. Base metal miners, we've seen a huge rally from the 2020 lows. After COVID, they formed a tight bull flag, and now they're breaking out and running to new highs again. Lots of volume, lots of people piling into the miner space. This group of miners was kind of leading the charge that commodities in general were going to start to go up. And then if we take a look over at the COPEX miners, this one has formed very similar pattern. It's got a rounding formation. It's starting to break. It's getting very close to breaking to some new highs. They've been moving up very nicely as well. And then, of course, we go over to gold miners. They have really been underperforming for a long time, but they're now coming to life. In fact, they're like the third best sector performing in the last couple months. They're leading this market higher. And gold miners, I tend to find, are one of the last sectors to do very well just before a bear market in stocks take place. And so they're right now in the front, kind of horse running right now. I think we have potentially a few more months of miners and commodities to continue to try and push up higher. And then I think we're going to see probably a big shift in the overall stock market trend. I think miners are going to buck the trend. They're going to go up. But we're going to see the economy probably turn in the next couple of months, be more so. Big inflation, recession is coming or here will be the mainstream news. A lot of people still don't believe it. They don't want to believe it, but I think it'll be pretty blatantly obvious. So I think the key here is just watching what all the different sectors and assets are doing. Sector rotation tells us kind of where we are in the economic and the stock market cycle. And based on everything unfolding, we are right at a topping phase for the stock market. Commodities are on fire, and the recession is around the corner. But we won't see it again for probably several months before it's kind of confirmed, and maybe even longer than that. But we're in that phase where you got to be very protective with your capital. I wouldn't be splurging on discretionary products. I mean, our living expenses are going to skyrocket even more. And people are going to have less to spend on discretionary products. And that's what's going to start to create a recession. People just tighten up their wallets and everything fades until, it gets bad enough that there's a bottom.
Yeah, stagflation. If you listen to Charles Nenner, and if you go back to the 70s, you probably don't remember the 70s, but I know you've studied them. And that was the stagflationary 70s. From the late 60s really to the early 80s till interest rates hit 20%, which they can't do now because that would cause a global economic cataclysm. But that's what I lived through. And that's why I tell people, just buy the house now, get the house, because real rates are negative double digits, depending what you pay on the mortgage. If you can afford to service the debt, confidently service it, you're going to come out so far ahead getting a house, even though the prices are so inflated now. And they could come down. But do you honestly believe, Chris, that rents could come down? Unless there's a major deflationary event where your dollar becomes worth 10 times more what it is today. And hey, this could happen. But short of that occurring, rents are going higher because less owners, less affordability. You don't have any choice but to rent.
Yeah. I'm a big fan of physical assets. I love real estate. I own a lot of real estate. I own a lot of precious metals. And it's really tough to go wrong with something that, the stock market, as much as there's companies behind those shares, it's still just digital and things, I'm very concerned. I like physical assets, especially when we're getting into shaky times like this. Who knows what's going to happen? Banks close down, brokers, exchanges, something happens. I mean, I definitely like the physical side of things. And I think there's a huge benefit of owning physical metals simply because there's going to be this massive premium. If we see gold and silver take off, if you own a physical bar, say gold is, $2,600 an ounce, it hits our first target. Well, it might actually cost you like $3,200 to actually get delivery of a real bar. So people who are stockpiling physical, they're going to make a huge premium because they actually have a bar versus some digital, flipping money back and forth. There's that premium, right? So I think the physical is actually going to add a lot of potential gain to anyone who puts the effort in to buy it and safely store it. And I think it'll come back, huge down the road.
Agreed. Definitely agreed. Well, it's an interesting world out there for sure. And yeah, I just remember in the 70s, people didn't want to hold cash. They were buying everything they possibly could to not be holding the cash because it was depreciating, maybe not by the day, but by the week and the month for certain. And I think we could be heading towards that again. Well, it's great to have you on. It's nice to give you the opportunity to take a victory lap, Chris.
Thank you.
And then you'll be taking a lot more soon. I just have a feeling because I think the commodity super cycle now is real. And hey, you don't have to have physical just to play it. You can play the ETFs, but especially in those agricultural commodities and oil, et cetera, you don't necessarily want to be buying futures.
No.
If you're sophisticated enough, do it by all means. I'm not telling you to do one thing or another, but just saying for those of us who are less into the esoterica of futures and options, then certainly the ETFs are the way to go. Hey,
for sure.
So technicaltraders.com, that's where we find you these days.
Yep, thetechnicaltraders.com. And every morning I walk through the charts and show everybody what I'm looking at, what's moving, how they're relating to each other. And if I take any trades, I share with followers. And we trade ETFs together. That's my main focus.
All right, excellent. Hey, you've got a question for Chris, shoot me an email, kl@kerrylutz.com. Don't forget, go to the site, financialsurvivalnetwork.com. Sign up for your free newsletter. Chris, always a pleasure. We'll talk to you again soon.
Thanks, Kerry. Take care.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.